In other business news, South African consumers are struggling to build emergency cash savings due to the ongoing impact of financial pressure. A survey by Standard Bank has found that more than half of entry-level private banking clients have less than 1 month of their salary saved. It's also noted that those earning between 25 and 58,000 rand a month have no accessible savings. Money management and advisory head at Standard Bank, Doret Jooste, discusses this with us. Thank you so much for giving us your time, Doret. It's a concerning picture, but we've known this for quite some time. Talk us through the extent.
Thank you. Yes, what we've seen in the data took us by surprise a little bit. We typically focus on middle-income households when we start talking about savings, etc., in the market. But what we wanted to actually find out here is how our entry-level private banking customers are actually, their financial resilience if there is to be an unexpected expense. And I think what we see here is that the savings rate currently is quite low. And why we actually publish this data is to start having the conversation around, what are some of the practical things that this emerging affluent customers can actually start doing to help boost their savings. We know that having cash savings on hand, that is like a cornerstone of wealth building. And a lot of these clients are embarking on that journey. And having that cash savings on hand is fundamental to their success.
Let's talk about the practical steps that one can incorporate. We are seeing 29%, according to the study, of high-income earners struggling.
Yes, absolutely. I think, in the previous snippet, we saw inflation is coming down slightly. We know we're on the brink of interest rate cuts, so that relief will start coming through. And when that starts coming through, it will just help people unlock cash flow. I think an important thing is savings is an intentional thing. A lot of us think around, when I earn more, I will save more. But the thing is, we need to make that decision and actually take active steps to do it. So some of the tips that we are sharing is, making your savings disciplined, automating it. So here, for example, putting in a debit order. As soon as your salary hits your account, have a debit order that actually takes money out of your transactional account into a savings product. There's a scheduled transfer that you can also activate, like via the Standard Bank app. That's a practical way of getting in the habit of saving without having to discipline yourself every month to do it. Another practical way, and specifically what we have launched to this group of clients in our prestige banking proposition, is smart value banking. Now, what we mean here, and one of the key aspects of it, is using your UCount rewards program to actually convert your rewards into savings. And that's a fantastic functionality that UCount rewards actually offer. Other things include like our Health app, where you can get free health assessments digitally. So it's practical ways in which to free up amounts. But I think in broader terms, even if you're not a Standard Bank customer, just making sure that even if it's like a small nyana amount, like it counts over the long term and it adds up. So save that 50 bucks, the 100 rands, the 200 rands, and start building that discipline, because over time, it will definitely stand you in good stead.
I agree with you that smaller yana goes a long way in the long run. As a parting shot, Doret, then, the cohort that has been assessed under this survey, what does it tell us then about those who are not high-income earners and the resilience in the current economic climate or lack thereof?
I think, the picture, if we see that, entry-level private banking customers are not saving, there's a thing to be said around discipline and maybe habits. But when we go lower in the income chain, there's a lot of pressure at the moment. Interest rates have been high for long. We know the rationale around it. But the reality is a lot of people are sitting with things like personal loans, credit card debt, that actually attract high interest rates. Now, what that means is the higher the interest rate goes, the more I need to repay to actually pay these loans back. And that's a lot of strain we're seeing in our middle income customers. So again, it's actually start to encouraging, if you have a 20 bucks, if you have a 50 rand, start putting it away. or start paying off that debt sooner so that the cost of your long-term credit actually comes down. And we are looking forward to the easing interest rate cycle and for that ease and relief actually to start filtering through to the consumer.
Thank you so much for your input. Doret Jooste is with Standard Bank talking to us about their latest survey that looks into the cohort of higher income earners. They too are struggling to save.